Bitcoin has been the currency of choice for virtually all ransomware attacks for years since the central bank or government doesn't control it. Still, hackers are increasingly requesting less traceable and more anonymous Bitcoin alternatives named Monero. Stay to find out more about the scoop. Welcome to Moneymaker. Moneymaker is a channel dedicated to helping others become financially independent through cryptocurrency trading and investment. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Monero, formerly known as BitMonero, was founded in 2014 as a hard fork or split from Bytecoin BCN, which was launched in 2012. After the community objected to the controversial alterations to the coin, the fork was formed by an anonymous member of the Bytecoin community with the pseudonym Thankful for Today. Monero was built by numerous anonymous developers, and there are allegations that it was created by Satoshi Nakamoto, the inventor of Bitcoin, BTC. Monero is based on the security, privacy, and decentralization concepts. Monero continues to evolve with privacy and security first, convenience of use and efficiency second, according to its website. Because the blockchain is public and transparent, the identities of parties participating in Bitcoin transactions can be traced, but Monero uses powerful cryptography to disguise the identities of senders and recipients. Since its introduction, Monero's developers have implemented a number of significant enhancements. To improve its flexibility and efficiency, they moved the blockchain to a new database structure. They also defined minimum ring signature sizes, which refer to the number of persons who are authorized to digitally sign a transaction, similar to the number of signatories on a joint bank account. Monero's original technology was based on CryptoNote, which combines ring signatures and one-off keys to hide the origin and destination of blockchain transactions.
The database is now key encrypted.
To hide transaction quantities, the developers created Ring Confidential Transactions, Ring CT, in January 2017. This gave rise to a new sort of ring signature known as a multi-layered linkable spontaneous anonymous group MLSAG signature, which efficiently hides transaction details while employing verifiable trustless currency production. The MLSAG signature was replaced by the Concise Linkable Spontaneous Anonymous Group CLSAG signature in a Monero network upgrade in October 2020, which increased transaction verification performance by around 20%, while reduced transaction size by around 25%. The Monero blockchain is home to the XMR coin. The proof-of-work algorithm that Bitcoin mining is based on is used to mine XMR. However, it employs a technique known as smart mining, in which a miner boosts network security by enlisting the help of a large number of individuals. The hash rate was boosted by having a variety of various sources, which kept the network decentralized. Instead of encouraging the use of huge mining farms and pools, which results in centralization, the smart miner enables transparent CPU mining on each individual user's PC. According to its website, there are more than 5.8 million transactions utilizing Monero coins between April 2020 and April 2021, an average of 16,000 transactions per day, based on little publicly available data on the blockchain. From April 2019 to April 2020, there were roughly 2.8 million total transactions, with an average of 7,700 per day.
Transaction complete.
A number of companies, including Australian hardware wallet retailer Bitgear, yoga supplier retailer Yogi Way, and apparel retailer Z1 Fashion, accept the XMR coin as payment. Payment gateways like Crypt API, Coin Payments, and Now Payments use it, and the WooCommerce plugin for online stores has a Monero extension. Monero's anonymity feature gives cybercriminals more freedom from some of the tracking tools and methods available on the Bitcoin network. According to Mark Grens, president of Digital Mint, a company that helps corporate victims pay ransoms, while Bitcoin still tops ransomware demands, more threat actors are starting to seek Monero. Just in the last several months, we've seen Reveal give discounts or seek payments in Monero, Holland remarked. Monero was also a popular option on Alphabay, a major underground marketplace that operated until 2017. It's almost like we're seeing a resurgence in Monero, at least from a cybercriminal standpoint, because it has intrinsically more privacy than some of the other coins out there. Holland said of Monero's recent gain in popularity among ransomware attackers. However, there are a few key roadblocks in the way of Monero's broad adoption. It's not as liquid as other cryptocurrencies for starters. Due to regulatory concerns, many regulated exchanges have chosen not to list it, according to Matty Greenspan, portfolio manager and founder of Quantum Economics. He stated, "It obviously isn't benefiting as much from the recent wave of institutional investments." In practice, this implies that cybercriminals will have a harder time getting paid directly in the currency. It's really difficult to get a bunch of Monero to pay someone if you're a corporation. Theo told CNBC, "The on and off ramps, which connect fiat cash and crypto tokens, might make the digital currency more vulnerable to regulation. I'd bet the US and other regulators are going to go after them Monero quite aggressively," Theo said. One method they could do this is to warn exchanges that listing Monero could result in their license being revoked. While the US government can keep Monero at bay by marginalizing liquidity points, Nick Carter of Castle Island Ventures argues that markets that allow peer-to-peer Monero to fiat transactions will always be difficult to regulate.
You want to regulate it?
There's also nothing in place to keep hackers within the jurisdiction of the United States. Criminals might easily opt to conduct all of their transactions outside of the United States, where they are not subject to the same kinds of regulations that American regulators might impose. Another reason why Bitcoin is still the currency of choice for most ransomware assaults is cyber insurance. Insurance is critical in this arena. The insurers frequently refuse to refund a ransom payment made in Monero, said Peter Marta, a former CIA case officer who now advises businesses on cyber risk management as a partner at law firm Hogan Lovells. One of the things that insurers will always look for is what kind of due diligence the victim firm did before making the payment to attempt to limit the likelihood that the cash will go to an organization on the sanctions list, Marta stated. Bitcoin's blockchain makes it easier to track transactions because it publishes transaction amounts as well as the addresses of both the sender and the recipients. There is also a well-established infrastructure in place to allow officials to keep track of those transactions. Authorities keep track of Bitcoin wallets associated with different sanctions regimes. According to Holland, while Monero provides more privacy than Bitcoin, threat actors have figured out how to anonymize Bitcoin transactions in order to hide the chain of custody.
God damn it! Hate this hacker crap!
Hackers, he claims, commonly utilize a mixing or tumbling service to mix criminal funds with clean crypto to produce a new kind of Bitcoin, which they can then trade on currency exchanges. Even though the blockchain for Bitcoin is open to the public, there are still techniques to make it difficult for investigators to track transactions to their final destination. According to CoinMarketCap, XMR is the 27th largest cryptocurrency on May 24th, with a market capitalization of $4.23 million. The total supply created up to this point is 17.9 million coins in circulation. The number of XMR that can be mined has no technical restriction. However, similar to Bitcoins, the block mining reward decreases over time as more are created, eventually settling at 0.6 XMR every 2 minutes around 2022. Monero's XRM is anticipated to reach $438.50 by the end of 2021, according to the algorithm-based forecasting site Wallet Investor. By the end of 2022, the price will have risen to a new all-time high of $548.56. XRM will be worth up to $875.20 at the end of 2025 and $926.49 in May 2026. Coinpedia, another cryptocurrency trading website, believes that if the cryptocurrency market remains optimistic for the most part, Monero might hit a high of $700 by the end of 2021. Monero's value will comfortably trade around the $500 mark if the market continues pessimistically. By 2022, a surge might push the price up to $1,500 before settling to $1,147. Monero might trade above $1,100 in 2025 if everything goes well. So armed with this knowledge, should you buy Monero now, when the price is low? XMR is one of the most private cryptocurrencies, and the need for private and safe cryptocurrencies will only grow as more crypto frauds come to light. Despite the volatility, Monero appears to be quickly stabilizing, and many businesses have begun to accept XRM as a form of payment. All of them are positive indicators that you should invest in this cryptocurrency. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.